What's up guys, welcome back to the channel, welcome back to another video. Today we're going to be talking about saving versus investing. So what do I think the definition of a saver is? Well, I think a saver is someone who understands the value of money. They also understand personal finance. What savers typically do is they earn money through their W-2 or 9-to-5 job or through their business. They take a portion of that money that they've earned and they tuck it away in a safe place. One of the things that's most important to a saver is safety. And where are you going to get safety when it comes to your money? Typically through a bank or a credit union. So that's where savers store their money. They store it at a bank or a credit union, and their money is insured by our federal government. They also feel comfortable with investing, in most cases, in a company-sponsored 401k program or through a retirement program that they've set up through their company. Nothing wrong at all with being a saver, but I think there's a better option. So let's talk a little bit about what do I think investing is. And what's the profile of an investor? Well, I think you got three types of investors. The first type is what I would call a pre-investor. That's someone who's been studying investing, they've been thinking about investing, they've been talking to people about it, they've been doing all the research they can do to find out about investing. The second type of investor is what I call a passive investor. Now that person has a level of sophistication, they understand the concept of money, they have a good financial plan in place, but they're not quite comfortable with doing this investment thing on their own. So they go out and hire a professional to help them with their investing needs. And that professional will sit down with them, walk through a couple different strategies, and then that passive investor will say, okay, I choose this one. And then it's in the hands of that professional licensed investment advisor to manage their money, make investments, take money out of investments, put it in new investments, etc. Now the third type of investor is what I call an active investor. This active investor understands the power of using money to make money. So they're not in a position where they want someone else, in most cases, to make those decisions for them. They typically will make the decisions themselves. And this active investor also understands leverage. They also understand return on investment. So those are the two things that an active investor is concerned with. They're concerned with leverage. How do I leverage money to make more money? And then when I do leverage my money to make more money, or leverage others' money to make more money, I'm also super concerned with my return on capital. So in order for them to make sure they get the right return on capital, they're more involved and more active in their own investing. Are you a saver or are you an investor? Here's a couple of pros and cons to each. As a saver, again, I think a pro as a saver is your money is at a bank or a credit union and it's safe. It's FDIC insured, and no matter what happens, as long as our federal government doesn't fail, your money is safe. So that's one of the pros of being a saver. Another pro of being a saver is typically with savers, they already have their rainy day fund put away. They're already investing in other investments at banks like certificates of deposits or high yield money markets. And they also understand, again, like I mentioned earlier, the concept of taking advantage of employer-sponsored retirement accounts like 401ks and getting the match if the company offers a match. Or if they own their own business, they're already in tune to how to create and set up IRA accounts that'll be funded by their business. Couple of cons to being a saver. The biggest con is inflation. In 2019, the price of milk, say it was $3.25. If the cost of inflation is 2.5%, the very next year, that price of that gallon of milk is going to go up by 2.5%. Or instead of being $3.24, the very next year, you got to add 8 cents to that. So now it's $3.33. So the price of that gallon of milk went up by 8 cents. So the cost of inflation is typically going to be higher or outpace a money market savings account at a bank, or in most cases a certificate of deposit at a bank. It certainly will outpace a savings account at a bank. So that's a con. The cost of living is typically higher than what your interest rate is on the money that you got in the bank. So really your purchasing power for that money that you have at the bank is dwindling every year because of inflation. The second con is taxes. Normally for savers, they're in a tax bracket. The tax bracket can vary, but let's use 20% to 25% tax bracket. So now you get a high yield money market paying you a 1.50 interest rate, let's say on $100,000. So at the end of that year, you will make about $1,500 in interest because you got a 1.5% interest rate on $100,000, so you make about $1,500. Problem is, you got to pay taxes on that $1,500. And if you're in that 20% tax bracket or higher, you could be higher, but if you're in that, let's say 20% tax bracket, then guess what? You're going to have to pay $300 in taxes on that $1,500, because what is 20% of $1,500? That's $300. So what that does to your interest rate of 1.50, it reduces it to 1.17, I believe, percent. So you're not really earning 1.5% on that money, you're earning 1.17%. So those are the two cons on being a saver. As it relates to the investor, a couple of the pros on the investor is you can get higher returns on your capital. Way more than 1.5% or 2.5% as an investor, depending upon how savvy you are and what your risk tolerance is and what you invest in. So that's a pro. You can make more money, you can make a bigger return on your capital. The other pro is you have a variety of things that you can invest in to get that return. Opposed to going to a bank, you only have a couple of things at the bank you can invest in. Certificate of deposit, money market account, or a savings account. That's pretty much it. What are some of the cons as an investor? More risk. There is no guarantee on the return of your capital. You can lose it all. So that's the biggest con, is you can lose your money as an investor. There is no safety net. There is no guarantee. So you got to know what you're doing in order to be an effective investor. Back to what I said earlier, the question is, which one are you? Are you a saver or are you an investor? I look at myself as an investor. I'm an active investor because I want to create wealth. Normally, the folks that create wealth in our country and around the world are investors, and they're typically active investors, people who are not afraid to grab the bull by the horns, and if they get stuck, they get stuck. But if they can tame that bull, then they win. That's how it is as an active investor or a passive investor. But I would tell you, if you're looking to build wealth, you have to consider being an active investor and investing in assets that generate more money. Whereas a saver does not invest in assets that make more money. I guess you can call a certificate of deposit or a money market account or savings account an asset, but it's not going to be an asset that's going to generate very much money for you. Plus, on top of that, you're going to have to pay taxes on it right away. On the investor side, there are ways to delay paying taxes on the money that you made. For instance, on a financial investment portfolio, if you keep the investment long-term, and long-term in financial terms means more than 12 months, your tax rate is fixed at 15%. And in some cases, you may not have to pay any taxes on the gain on that financial investment portfolio. So there are some ways on the investment side to really make a lot of money and reduce your tax burden, and also create a wealth. Whereas opposed to on the savings side, I think you can create a good bunch of money over here, but I don't think you can create tremendous wealth by just being a saver. You can create a good lifestyle and a safety net for yourself, but I don't believe you can create real wealth unless you are an investor. But guys, that's just my opinion. Drop me some comments down in the comment box and let me know what you think about saver or an investor, and let me know which one you are. If you're stopping by the channel for the first time, please consider subscribing and share the video. Also, consider giving me a thumbs up. It helps the channel and it helps me too. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, and I'll catch you on the next video. Peace. If you want 2 free stocks, click on that link in the description box of the video, and Webull is going to give you 2 free stocks when you open a new Webull brokerage account. Deposit $5 in that brokerage account. They're going to give you 2 free stocks valued up to $2,300. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.